Good morning, America. Hubert Johnson here with Taxes Made Easy. We're going to talk about taxes expiring. We're going to go straight to the resource here. I haven't done a lot of this, but I think I'm going to be doing more of this to kind of show people where this information comes from and how you can find some of this information on your own. So again, we've got a lot of news to cover. But at the same time, we're going to really be focusing for our topic of the day on when and how do tax debts expire and go away. And I talked to someone just the other day, and he couldn't believe that tax debts actually expire. It's a real thing, and we'll go straight to the IRM Internal Revenue Manual and show you a little bit how to maneuver through that, find information, and get good information, because this is going right to the source. If the IRS isn't following these rules, you can cite the IRM to them and they need to change course. So we'll be right back to address this. Welcome back, everybody, to Taxes Made Easy. Got a lot of things to cover here. The first article I want to talk about, this is directly from irs.gov from their news center. And this is just a reminder, storm victims in 7 states, wherever they've declared a disaster, it extends out when the filing deadline to June 17th. So this is for their 2023 federal income tax returns and tax payments, instead of being due on April 15th, due Monday, June 17th. So this is all due to disasters by different areas. So there's San Diego, California. So in Connecticut, so you have a couple tribal nations, and also near London County, 9 counties in Michigan, 7 counties in Maine, 9 counties in Tennessee, 2 in Washington, and 6 counties in West Virginia. So if you lived in any of these counties, be aware that there is assistance for you later, deadlines, and if you have questions, you can always give us a call, 520-485-7371. So again, instead of April 15th, June 17th deadlines. So it's interesting that came across that article yesterday about from Blaze TV about people. It's, again, as long as you go to college and you choose a good degree, it is still very important. And again, they were lamenting that more people aren't going, saying we do need an educated workforce. So we came across a couple articles talking about that, but one of the issues that I wasn't even aware of were issues going on with the FAFSA. So Congress, in its wisdom, decided to update the situation, and this article is a little bit old. It's from April 13th, but it's still hurting people. And messing people up on their FAFSA applications. And this is a CNN article. So essentially, dealing with FAFSA is still difficult. Congress decided to make it easy. You have to go through and do your financial information, often your parents' financial information, unless you are a member of the military or served in the military. There's a couple exceptions to that, but you have to get this all, and before you apply for colleges, so that they can consider that as a financial aid package. They want to see what kind of federal aid you qualify for. So they simplified the application, and then they have some major implementation delays. So a botched rollout of new application causing major delays, and so people, normally by May 1st, you have to make a decision of what school you're going to, and what's available to you as far as federal aid. So again, that breaks it down into 3 different stories of people that have all 3 students that have applied for schools, but they're juggling which schools they're going to go to due to costs and not having an idea of what they're going to actually end up paying. So because of that, this is the article from Washington Examiner. So this is the main article that came out. And I don't have a child going to college right now. And so, it's not something I would know about. But I have a son that did complete the FAFSA. He's going on a mission first for a couple of years, so he's not going straight to college. But because of all this and all of these issues, a lot of people aren't going to know what their finances are. They're not going to know what schools they can afford. And so if they don't have this information, they're expecting that a lot fewer people are going to go to college in the fall. So in the spring 2024 semester, they saw a 2.5% increase. The first time it's increased in 4 years. But on the flip side of that, and they really get into the numbers here, and here they talk about the botched Fafsa application or rollout. So that's one of the big issues. Is getting it taken care of, getting the FAFSA completed correctly, and if there are any kind of corrections that need to be made to it, which is common, making those corrections is very, very difficult. So double-digit declines in the number of completed FAFSA applications. So again, it's a concern for students going to school. In West Virginia, FAFSA completed application rates were down 40% in the state. So normally you have to do the federal one before you can qualify for any state aid, and they're trying to address that by making it so state aid is not dependent on the FAFSA being completed, because right now they're having all kinds of issues. So we're talking about if people take a year off, go do something else. A lot of people go in the military, start a family, be a homemaker, etc. A lot of those people probably won't continue on with the university. They'll find a different path. So it's just interesting how, it's funny how things pop up. Just yesterday I was talking about the concern about people that go into full 4-year college. And it's an investment. It's a long-term investment. Going to college full time. And as long as you have the right degree and you know what you're doing, and things change. People change their decisions. I was a junior in college when I decided I was going to be a high school history teacher. And that was my major, was social sciences. And I took a bunch of classes specifically to teach. In my junior year, they started firing teachers up and down California. I switched directions. I ended up going to law school instead. So it happens. People make changes, but being aware of the situation. If you have someone that's preparing for college, talk to them. If you have someone next year, make sure you're aware of these issues and that it's done right to make sure that your kid gets through the process without any major hiccups. So this next article is from Fox Business. This is not just happening in California, it's happening in other states as well, where electric vehicles, EVs, are they're heavier because the batteries are so heavier on average than gas vehicles, which means they cause more wear and tear on the roads. I've even read that it takes special tires to handle the extra weight from an EV versus a normal tire. So, a couple things here. You have more damage being done to the roads, and at the same time, the states are losing gas tax revenue because They're not buying gas. And it's a gas tax revenue that fixes the roads.
Miracles. Maybe 1%
So California and others, are thinking about doing a road charge.
Maybe I can help.
So it's not, and this would charge drivers based on the number of miles rather than how much gas they purchase.
Right.
So before everything was gas, it was fairly easy. You buy gas, you pay tax, it all goes into the road fund, unless it's rated and misspent,
All right, Patrick, welcome
which
back.
California
What's your forecast for
wants to
gas
do.
prices this summer?
Well, Stuart, I think overall,
But it is important. Gas tax revenues are very important to California to maintain their roads,
most Americans are going to be
and
somewhere in
this
the
is part of
mid-$2 range.
their budget issues. So what they're suggesting is to make it, they have a pilot program. It's completely optional, and they're offering incentives to help people willing to participate in
I'm
it.
expecting gas prices to continue moderating. The national average already down about 10 cents a gallon.
And they want people to provide feedback to the state regarding their experience. So you can do a manual odometer entry, onboard plug-in device with or without GPS,
50 cents
or in-vehicle telematics without GPS. So the idea is they don't want, and they understand that people they don't want the state to have a GPS and tracker and see exactly where they're going at all times. It's very big brotherish. But on the other hand, California's got to reconsider things. Now, if they do a road tax, think they're going to get rid of the gas tax? Probably not.
The list goes on and on. Unfortunately for California,
the amount of profit that states get in gas taxes is far more. State and federal government get is far more than any
because there are so many more electric vehicles on the
profit the oil companies make. It's kind of funny.
Well,
look at the breakdown
it is down,
there.
Stuart. I think certainly part of it is because of the rise of EVs. U.S. gasoline.
Again, Mercedes, another company, putting the brakes on
Nissan
the other day is
still
really
moving
slowing.
over to EVs.
There's an article that Nissan is really slowing down things as well. So the gas tax bill and gas tax has been around for quite a while,
but yes, I do think that there is
they've got to change things up
of the decrease in demand. That's because of the transition.
And they've got to do it fairly quickly because
EVs aren't going to get any more affordable here in the years ahead.
You got to change with the times.
Goes for gas prices this summer. That's Gas Buddy's statement. Thanks so much, Patrick. See you again soon.
Thanks, Stuart.
And even though it's only EVs aren't going to completely take over the market anytime soon. Again, President Biden wants 50% of all new vehicle sales by 2030. At the rate it's going now, unless there's some major breakthroughs, it's not happening. But again, just a small percentage of EVs are affecting the gas taxes and the overall budget. So it's being felt on a larger level by the entire state. We have another break coming up, and we'll continue the conversation after that. Welcome back, everybody, and just want to continue the conversation here. I'm talking about the gas replacement and some of the things affecting manufacturing. So again, we have on affecting the economy. So I've got a couple articles here, interesting articles, talking about how a lot of the administrations, are the Biden proposals are going to hurt people, hurt businesses. So again, this is an interesting it's a Fox Business article cited by Yahoo Finance, or Yahoo Finance republished it, or shared the same article. And it's kind of interesting talking about, it's a little bit of doom and gloom here. We do want to be a little more positive where we can be about the economy, about where things are heading. But whenever you have the federal government create artificial deadlines, increases in taxes, etc., you create a lot of there's unintended consequences with all of this. So, so this is talking about the bifurcated or split tax system. One tax table is for your ordinary income from your job or for your business. You go, you work, you create, and whatever income you get from your job or your business, that gets taxed as income. In a different way, long-term capital gains, so those are more than a year, investments of more than a year. These are assets that have grown in appreciation, such as stocks or business value held more than 1 year, 365 days. So, again, taxes are very complicated. It gets pretty nuts. I mean, that's why they have a different tax rate. When they talk about, for the highest tax rate, on ordinary income, it's 37%. And if the Trump cuts aren't continued, it will increase it to 39.6%. 2.6% increase, right? Doesn't sound that bad. But the taxable amount on long-term capital gains is currently at, I believe it's 21%. It's scheduled to go up to 39.6% as well. So, and here under the new proposed Biden tax plan, 10 states would have more than a 50% capital gains tax rate. So when you get taxed at the federal and the state level, California would be the highest at 57.9%. So whatever gains you get, you're paying almost 60% in taxes for long-term capital gains. So what kind of gains are these? So the marginal rate for federal taxes would be essentially 44.6%. So today it's 23.8%. It's increasing 20.8%. They're saying when you look at it, depending on how you look at the numbers, going from 23.8 to a 44.6% is almost doubling the capital gains tax rate. So first, marginal tax rate goes from 37 to 39.6%. Secondly, capital gains would go from 20% to 39.6%. And then you have an addition here, a surtax with the Affordable Care Act. First it was 3.8%. New proposals to increase it to 5%. So this is where you start adding more percentage points on top of this. So not sure how they would enforce this and reinstate the Obamacare penalties. They've largely been allowed to go to the wayside, but again, you can see those taxes come back from the Affordable Care Act or Obamacare. So why is this such bad news? And again, the news, they're always trying to get information. They're always trying to get people to pay attention. So when the TCJA or the Trump tax cuts expires at the end of 2025, what do you think people will be doing if combined with state taxes, they could be paying close to 60%? So they'll sell off appreciated stock positions at the end of 25 to get the better tax rates before 2026 starts. So in law and demand, when people sell, it begets more selling, panic, and people dump stocks. So if you see a lot of people exiting the stock market, that's going to be a big concern. You drive the stock market down, but at the same time, it hurts people's retirements. It hurts, again, there's all kinds of people hurt in the process. One of the big concerns here, long-term capital gains. Business owners have their wealth in two categories: real estate and business ownership. So again, small businesses, job creators for almost 63% of all new jobs in the US. Small businesses really do drive job creation. And to do that, you would have to increase your business by 50% or increase the value of the business by 50% to have the same result. So again, it's going to be a lot of people are going to sell businesses. They're going to get out of businesses. And when a lot of times when people sell their businesses, people lose jobs. Smaller companies are consolidated into bigger companies, and not good overall for the economy. So it's can be very concerning. You know, it can having artificial deadlines, artificial tax deadlines where, hey, you need to sell by now or your tax rate's going to double. A lot of people are going to take advantage of those new tax rates, and so they're raising this red flag, saying, hey, if we don't do something about this, and this is the plan, is to double the taxation, you're going to see a lot of movement, and either be prepared for it, sell beforehand, or when things drop, that's usually the best time to buy. So I want to share one last article here. This is talking about government regulations and how that affects American manufacturing. So this is based on an article done by Booker Scott. And I believe it's a podcast. So a podcast that he did. So I'm not sure exactly how he's pulling these numbers out. These are estimated numbers. I would take them with a grain of salt. But it is important to note that administrative red tape, additional regulations are very burdensome on businesses. You have to deal with it as a small business owner. Larger companies are used to having, attorneys handle this, but for small to medium businesses, it's a lot more difficult to handle something like this. So they go back to the Obama, Biden, and then Trump administrations. Is really what they're looking at. And so since 2005, they're estimating about $2.7 trillion in added costs from government regulations. So this is, you can say this is hidden inflation from government overreach or additional costs to production, especially on manufacturing. That's very concerning. So again, we want to actually produce goods. We want to actually be producing things here locally in the United States and be able to sell it, because this is where jobs come. This is where, again, an entire economy cannot just be based on a service economy where we don't produce anything. So again, it's estimated that in 2022, regulations cost $29,000 per employee for American manufacturing, double the amount of any other sector. It goes up to $50,100 for companies with less than 50 employees. So again, this is I'm not sure. It doesn't really break out where they're getting these numbers or how they're coming at it, but it is costly to run a small business. It is costly to have employees. And they're saying that the total cost is 12% of the entire GDP is dealing with federal regulations. So basically here Biden's added 1.3 trillion, and since his inauguration, he's added 1.6 trillion in costs due to regulations. So here this I think is where I think it's clear. This part right here. Obama changed 1,241 and added 309.2 billion in cost to deal with the administrative state. And these are a lot of these are rules and regulations that they're not laws, not passed by Congress, but this is the administrative state making rules and decisions. Trump famously went in and he said, we're going to take cut the red tape, cut through it. So he changed 984 rules and then actually lowered costs by 159 billion. Joe Biden has changed the rules 923 rules have been changed, adding 1.6 trillion to American companies. So it went reversed a little bit under the Trump administration and took off again. So no wonder we're struggling with American manufacturing. It's a lot cheaper to go elsewhere, to China, Mexico, etc. But again, this is one of the big things that affects manufacturing and affects job creation, and we want to address that. I mean, again, there are costs and having too many regulations and how that can affect not only individuals but entire economies, because a lot of areas are dependent on small businesses for growth. When small to medium companies shut down, it can hurt an entire area. So I'm going to share one last, this is not an article, but this is what we're going to focus on for the main topic of the day. So we're going to go directly to irs.gov. Yay. So if you haven't gone to irs.gov, you should. We all have to deal with taxes and understanding where to not only how to maneuver through to get information from the website, but also to do some research, inform yourselves. So there's so much bad information about taxes out there. It's really important to have some good information to help you. Now, caveat, not everything on irs.gov is 100% accurate. So knowing the rules and regulations, you have these articles that I put out, again, so if you go to the news, a lot of the articles that I talk about mention, that's for the 17 storm victims that I mentioned earlier, free file program. And again, they come out regularly with articles. Some are helpful, some are. One of these I didn't talk about. The IRS wins a Certificate of Excellence in Accountability Report. I don't know where they're coming up with that. The IRS is struggling in many, many ways, and accountability is not their strong suit. Last week I had someone tell me that I was going through financials for a client and they didn't understand that people had to have taxes withheld from their paycheck and didn't. I think she finally got it, but it took a while. It's like, don't you get a W-2 check? Aren't there taxes withheld from your paycheck? That's what I'm talking about, current year taxes. She was struggling to understand that, which is pretty basic. So you can get help. There's news, especially for charities, nonprofits. If you're a tax professional, there's links. If you're going to file, it tells you how to file, when to file, where to file. So if you're looking for individuals, businesses, there are charts, information, pay, direct pay by a payment plan, or ETPS if you have a business, and you have payroll. If you have enough employees, they want you to get set up with the ETPS. Refunds, where's my refund? It's a pretty handy tool. All kinds of forms, instructions. Most forms have instructions that go with them. But what I really want to focus on, if you want to access transcripts or whatever, you can sign into your account. But what I want to focus on today is the IRM. I'm going to just take a little field trip here. So the Internal Revenue Manual. So there's no direct link up here, but if you just type in IRM or Internal Revenue Manual, this comes up. The Internal Revenue Manual is essentially the IRS's guidebook. So this is where you go to get information about how the IRS is supposed to be addressing cases, their overall rules and policies. Have I read this whole thing? No, because it'd be like bashing my brain into a wall. Why? Because it's written for technocrats. It's written for it's like reading a manual on how to set up a TV or a TV remote, and it's very dry, but it goes through and it has a lot of good information. Talks about examinations, collecting, appeals, criminal investigations. Has a lot of good information through here. Penalties and interest, taxpayer advocate service. So what I want to focus on is the collecting process today. So I'm just kind of walking you through how to go and find information. So here are a lot of the main topics: double jeopardy, balancing civil and criminal cases, courtesy investigation, collection appeal rights. Those are very important. Taxpayer contacts, how does the IRS actually reach out to people? How are they supposed to reach out to you? Delinquent returns, field collection techniques, abatements, locating taxpayers on the assets. Yeah, a lot of these don't sound fun, but this is how the IRS, and it lays out how they're supposed to go through this. And also lays out the entire IRS analysis, how they're supposed to do it, it's very detailed. So every now and then we do find some gray areas that aren't exactly on point. And we can argue in the gray area, but most of the time there's general guidance. So if you just click on this, Collection Statute Expiration, this is all about tax debt going away. And it goes away 10 years, roughly 10 years from the date of assessment, and we're running a little short on time. And so it talks about program scope and objectives, a lot of other stuff, blah, 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 that you don't really want to know, or if you ever need to fall asleep, you can't fall asleep, this is great reading material for it. So make changes, add a reminder, blah, blah, blah. You could always go down on the side and find what works for you, working them in CSEDs. And the CSED is just the Collection Statute Expiration Date. But we're going to break this down when we come back from our commercial break and really kind of dive into this. Welcome back. And if this looks like gobbledygook, it is. So why would you want to go to the IRM? When you can figure out how to navigate it and read it, this is really going to the source and understanding how the IRS works. Now, you got to understand that this is essentially a manual for how the IRS is supposed to do their job. And when they're working outside the IRM, then you can correct them and say, this is how you're supposed to do your job. So we're gonna, if you look to the side here, background, authority, responsibilities, those are always the boring parts, acronyms. So we're gonna skip ahead. And transaction codes, these are things that have their own CSEDs or can. Delinquency penalty, estimated tax payment penalty, deposit penalty. So what I really want to focus on though, case actions that can suspend and or extend a CSED. So when your tax return is first filed or the balance is first assessed, so if they do a filing enforcement for you, that's when it starts running. Now, that's not always the same with the states, so be aware of that. Now, this is a 10-year collection statute expiration date. And actually, when you call them, they actually have a date, in most cases, unless it's currently suspended. But that's a date certain when the tax debt should go away. Lately, the IRS, the last few years, they've been recalculating those dates and revisiting them as it gets closer, so it makes it a little bit harder to rely on those specific dates. But in general, once the 10-year collection period falls off, the tax debt goes away, and all the interest and penalties associated with that go away as well. So, what are some of the things that can extend out or extend a CSED? So instead of 10 years, it can be 11, it can be 12. Combat duty is one, and it has an example. Someone that was they're in the Army Reserves, they're in the combat zone, and legally they can't have any collections while they're in a combat zone. I'm not going to be garnishing someone's wages while they're out fighting for our country. An offer and compromise. Following that, they put a hold on your case while the offer is considered. Appeals. So we're going to go through this. Bankruptcy absolutely suspends the CSED. So bankruptcy takes priority of whatever the IRS is doing. If you file for bankruptcy, the IRS goes hands off. The thing is, be aware that whatever's not discharged or taken care of in bankruptcy, you will have to deal with in the back end. So, moving on from that, judgment, litigation, a court action brought against the taxpayer. So this is where it goes to tax court and or district court. So the DOJ gets involved. True story. And I shared this with the April Fools, where a gal had $550,000 expire. Because she was in court, that $550,000 had been extended out and extended out. It wasn't running, but as soon as we resolved the underlying issue with the DOJ, all the other tax debt dropped off because the judgment or litigation ended. When the IRS, as long as the IRS, if they file a suit to reduce and get a judgment on your case, this is when they're preparing to go seize your property, seize your house, vehicles, maybe any kind of assets. This is when you do everything wrong and you ignore the IRS. As long as they file for judgment before, they must be filed prior to the expiration, before it expires. And I've seen suits happen at the last minute, a week or two before they expired, and they're fully valid. When you do any kind of appeal, of cap appeal, CDP appeal, when the IRS has to stop what they're doing send it to the Independent Office of Appeals. Again, you get a 90-day extension on that. So this means every time you take these actions, a lot of people will kick the can down the road and they'll play games with the IRS, and all it does is extend out when their tax debt's actually going to expire. So it can be very counterproductive. I mentioned the offer and compromise. Now the key here, even though the offer and compromise does extend it out, what we see is between when you file an offer and when it's received, you have to be very careful that the IRS isn't taking any collection actions. So I can't tell you how many times I've looked at a case. We had tax debt getting ready to expire and an offer and compromise. We wanted to do an offer and compromise, or that was one option. If the offer is not successful, you can kick out when the tax debt is going to expire, and you can actually do harm to a case by considering an offer when you have tax debt that's fairly close to expiring. And sometimes that's not in your best interest to do an offer and compromise, even though you qualify. If it's going to go away, it's easier. It might make sense to just do a hardship status. And so while anytime the IRS can't levy or come after your assets, the expiration date is extended or suspended. All offer is pending for 30 days immediately following the rejection of the offer. That's for appeal rights. If appeal is requested within the 30 days, it continues for the entire time that it's with the offer unit or offer appeals, it gets extended out. For installment agreements, if you request an installment agreement, now some of this information is a little old, and that the IRS has stopped, and this is a while ago, asking for extensions. They used to ask people to extend do a voluntary waiver and extend the expiration date. They don't really do that anymore. That's a rare thing. Right here, in 2000, amended the IRC. And then you have then they have transaction codes on how you do that. So installment agreements, here you have to be very careful that you want to get an installment agreement set up. And I've even had a revenue officer use this in a very sly manner, almost illegal manner against one of my clients, by putting them in installment agreement status just as I was coming on the case. So he was extending out when a big tax debt, a big balance was supposed to go away in September. This was in May. We're talking a few $100,000, about $400,000 if I remember correctly. And it ended up not expiring until November because he was playing funny games. Now the clients were playing funny games too, but that's another story. And then they used to ask for waivers anytime you were doing an installment agreement to pay part of the balance, but not the whole part. They don't really do that anymore, though. So that is actually a good thing. And then they always have transactions or transaction codes for every single one of these. So this is how the IRS puts these codes on your tax account, electronically. So anybody that looks at it can see these codes, can see what's going on, what's happening with the tax account. So if you ask for relief from joint and several liability, so basically make an innocent spouse application that also extends out the CSED or when it will expire. Now, one key thing here, and this is something that's put out a lot. People will tell people, hey, just file for innocent spouse, file for innocent spouse. The standard for innocent spouse is actually pretty tough to meet. You have to have not known about the tax and not benefited or from the taxes not being paid. but not benefited. So even if you have a joint account and you receive the funds, or it was used to pay for things around the house, the money went to contribute to the household, the IRS is going to assume that, not that you knew about it, but that you benefited from it. Examples where innocent spouse would apply is if someone has a separate business, didn't pay the balances, and kept the money for themselves. So the money did not go to benefit the household. So it's a different level of it's a pretty high standard to meet. And that's why I see a lot of people, they apply for innocent spouse, someone even charges them to apply for innocent spouse, and it gets rejected. There are cases that would qualify for innocent spouse. And if you can get it, great. But be very aware that it's not foolproof. You can just kick out that expiration date by making these applications, and if they're not going to be successful, you're shooting yourself in the foot. So if someone's living outside the IRS for at least 6 months, you can get extended out, and then the policies for it, and this is how they recalculate the CSED. And again, every now and then they'll have charts that kind of break it down. And a national taxpayer's combat zone or contingency operations, we mentioned this for people that are in combat zones in the military. Military deferment, wrongful levy or seizure. So if you claim that the IRS did a wrongful levy or lien, they put a hold on collection activity while that's figured out, and also extending out estate taxes. Are handled differently. I'm not going to get into that because estate taxes are kind of how they're handled is kind of a different beast. But again, any kind of appeals. One thing to note is that if the IRS files for you, and I did briefly mention that, it's when that original date is when the balance is assessed. This is just with the IRS. That's when the 10-year starts running. So if you go and you file, let's say you have the IRS goes and files for you in the worst way possible, and then 3 years later you file your own return. Well, and it lowers the balance. You already have 3 years that have gone by in the 10 years, so you only have 7 years left before the entire thing goes away and expires. Now, for the substitute for return, if the IRS files for a substitute for return, you owe $20,000, and then you're required to file an original return, or you go and you file an original return. If it increases it, which is, I don't know why you would do that, I would just go off the IRS numbers. But if you increase it by $10,000, the original $20,000 started running as soon as the balance was assessed from the substitute for return, but the additional amount gets a new clock, and that starts running the 10 years all over again. So again, the waivers used to be a lot more common. You don't really have to worry about them anymore. And eminency says anything within 12 months, they try to see what they can do, but really after 6 months, they kind of shelve it. And unless you call them. So understanding CSEDs, how to go to that actual source, very, very important of how they're handled. It's very important for handling your case, making the best decisions for you and your family. And if you have questions, that's what we do is we dive into these issues. We understand how to read through these things so you don't have to suffer for that. Again, if you're bored and you can't fall asleep late at night, you can always pull out the IRM and read it. But again, it's a lot of good information there if you know how to read it and go through it. So I'm just going to wrap up real quick. I wish everybody a happy weekend. We've got a holiday weekend right here with Memorial Day. And when we have these holidays, I'm not always successful, but I try to sit down with my family and remember what we're actually celebrating. This is for those that have given their all for our country, that have given their lives in the service of our country. So take an opportunity, remember those in your family that have served, remember those that have given all, and it should be not only just barbecues, and we're having a barbecue on Monday. We're having a party tonight, barbecue on Monday, but it should be a reminder of the sacrifices that have built this country and that have made this, made us a free land. So I hope you have a great weekend. Again, if you have questions, give us a call at 520-485-7371. You can talk directly to me or someone else, another tax attorney. But take a moment. Remember those that have served and given their all for our country, and have a great weekend.